Welcome back, everybody, to Financial Trading Basics Part 3. In this, now we're just really going to start going through my actual trade examples. So up here I just have, again, chart patterns reflect the life cycle of human emotions retroactively. Regardless of what charts you're looking at, these do have patterns that are absolutely real, but they are all retroactive. Think about going for a workout. You go to the gym, loosen up, you go real hard for a little bit, and they're all tired and burnt out. That type of life cycle is present in the market, but no one knows when it's going to happen. So when you're looking at a chart and you see those patterns, it is literally all about the past. And so what I'm going to try to do now is just show you what I personally do to maximize what I think is, I think there's a correct way to trade any market, and there's definitely a way to maximize your profitability. So what I do personally is I made some distinction. I wrote micro cap investing, small, medium, large cap day trading, and then Bitcoin will also cover that in this video. But day trading, I think, is specific if you're opening and closing a position in one 9:30 to 4 session. And then investing, this could also be really considered swing trading. It's just terminology. But what I like to do is I like to take a small, medium, large cap stock that's really volatile on any given day trade it, and do that not every single day, but every day I day trade, while at the same time having a micro cap company that I've researched, know everything about, and any trading profits that I get from day trading, I invest and accumulate on micro caps over. If I'm day trading for something on a day or 2 weeks, my micro cap investing, I would say, is longer term, more of like 3 months, 6 months to a year. And then on the Bitcoin aspect, we will cover the components of the economy, trading Bitcoin, and price predictions. Bitcoin's a little bit different. Trading is the word that encompasses all of this, but Bitcoin has predefined supply and demand. So this is actually, of all of the trades we take, I actually think Bitcoin, I'll cover cryptocurrency in general, but I'm definitely a proponent that all of the cryptocurrencies are going to consolidate. Well, not all of them, but there'll be definitely Bitcoin dominance. And we'll cover that. So let's get into it. So the first trade we're going to cover is it's called CMG Holdings. The ticker is CMGO. Well, before we even get into the trade, I wanted to talk about what I consider the ideal trade. If you had to ask yourself, what's your ideal outcome of a trade? The very clear, obvious answer is you want to make as much money as possible. We've already been talking a little bit about how you can't time the market, but you want to try. And I guess we haven't talked about how many people will say that they'll give you, I don't know the statistics, but they'll say 90% of people lose money in the market. I don't really think that's true. What I think is true is most people that expose themselves to the market just kind of have no real game plan when they begin with. They go through the emotional FUD, fear, uncertainty, doubt, they lose some money, and they just kind of give up. And that's really more about just calibrating your own emotional output. So the thing that I want to get at is the ideal trade. You'll turn on CNBC and they'll talk about if you held Microsoft shares for 5 years, you would have billions of dollars or however X amount of money. But I want you to think about what would have to happen for you to have that big of a return. Well, you would have to hold that position through a lot of ups and downs. And you have to understand that before you start, because if you go into your account, right, and let's say you go up 100% on a trade, and then the next day, over the next 2 weeks, you see your accounts deplete 50 to 80% of those profits that you accumulated. Would you add to that trade? Would you hold that trade? Would you sell that trade? Anytime you have a very big return, you're going to have to hold that or have an initial position that's huge. I never have initial positions that are huge. I think that's crazy. If you have the money to do so, go for it. But the ideal trade will never happen. So what I have written up here is all profitable trades are better than all non-profitable trades. That's very obvious, But this is basically the only guiding rule of any trading strategy, and that's because, again, because of the emotional output that you experience while you're taking a trade. You go up on a trade, you're going to feel like it's always going to go up, whether you're up to the upside or downside. You start losing on a trade, you're going to feel like shit's hitting the fan, you're going to lose your house, your car, everything in 5 seconds. So the thing that we want to do when we're trading is simply get into winning positions, lock in profits, and then if we keep getting more profitable, fantastic. If not, well, then we've set our risk. So the very first thing we do on any trade is we set an initial risk tolerance. And mine on CMGO was $1,000. And this is the amount of money I'm willing to lose total throughout the whole trade, not on the initial entry. Like I said, I recommend on most trades 2 to 5 entries, 1 to 2 exits. My expected duration of the trade was 3 months. The actual duration that I was in the trade was over 10 months. So you can see that was not a super well-timed trade, to say the least. I had a very good return on it. It was a plus 156%, and it turned out to be about $33,000. And then I have the chart pattern here. The thing I want to say, okay, I want to talk a little bit about microcap, why I think there's a lot of opportunity in the microcap sector. The thing that we have today that other traders have not had over 100 years is immediate access to technology. We can get on our cell phones and our computers and go look up the CEOs, the SEC filings, people's reactions to those SEC filings, all of the analyst comments in 5 seconds if you take the time to do so. So the reason I think there's a lot of opportunity in the microcap is because simply forget the trading aspect and go to the entrepreneurial mindset. The way you make a big money with a company is you found really good companies, not to have a pump and dump scam for 2 weeks. So the microcap has a lot of non-reporting or delinquently reporting companies. And what that means is the SEC has some sort of, okay, so if you're trading something on the New York Stock Exchange or the NASDAQ, all of those have SEC required filings every single year. Not sure exactly what forms they have to file, for sure 10K. 8Ks are pretty much anytime something material's happening with the company. But the microcap, there's three breakdowns. There's the, frankly, I don't know them off the top of my head, but there's pink sheet, then there's like the OTC, QX, that one's reporting, then there's one more, I think it's like the OTC XB. Obviously I should have those written down, but the point, just look them up. But the point is microcap companies still have to report or still choose to report on given times. So the things that I really like to play is because if you research a company, the CEO and entrepreneurs 9 times out of 10 are not trying to scam people. If you go on forums, people will be accusing them of that all the time simply because business is slow. So that's why I really, really like big opportunity in the microcap. And any retail investor, this is definitely accessible. If you're managing billions of dollars, you might not be able to take these trades. Now, shoot, I was gonna say something else. Oh, I lost it. But anyway, I'll walk you through so the fundamental stimulus for this company, what was going on here, is they were dark, they were unreporting, they had not filed their financials in some amount of time. The CEO comes out and gives an update. He says, hey, we're going to be filing in 3 to 6 months, or however much time. Then you look into it and see how convinced you are of that legitimacy. But the thing for CMG specifically is they had a lawsuit. Actually, they had 2, but one was really small. So CEO comes out and says, hey guys, we have a lawsuit, and this is, okay, so this is January, this is 2019, I have January, this is the general chart trend. Go look this up yourself. This is just a 1-year daily candlestick chart. And so this is the trade, January, this is 2019. I began building my position 10 months previous to that, so I don't want to guess. January 2 years before that, or 2 months. October, or That's the wrong way. Probably May or June, I started building my position. Held it at minus 50% for probably 8 months. CEO comes out and says, "Hey guys, the lawsuit's going to settle." And now all the investors are all excited. So I want you to think about that emotion. Think of how many emotions you would have to deal with over, I don't know, so these are dailies, 2 weeks. Sorry, I got something in my ear bugging me. But forget what I just said there. The thing that happens is whenever there's a fundamental stimulus, there'll be some excitement period. But the business fundamental, the thing that really changes about the business, is going to take some time regardless of what it is. So I started building my position back in the July, May, June timeframe of 2018. Sit down real big. This is when the speculation starts coming out real heavy. Back when I entered, my price average I think was 0.004. It spikes up from about, at this point it's like the price per share is 0.001-ish, 1.5. Spikes up to 0.0068. And then we retrace down to 0.0034 and we kind of hang out. And then we come up here and we top out, it was just under 3 cents. And I was selling, I had one sell here at like, so this is like a penny 3.13, and then a second sale at a little over 2. And so the reason I show you this is because I did not trade it perfectly or even close to perfectly, and I still made 33 grand. You simply need to build a position and have it at some point in time, whenever, go profitable. That's all you need to do to make money in the stock market. Simple as that. But that was the CMG holding trade. Again, court lawsuit. Hasn't been filing for a while. Comes out for the rumor, for the speculation. We have these pops and these drops. You build a position, and now any trade you can take to the profit or to the upside or to the downside, and you can pretty much be profitable either way. But I on the micro cap, I always invest. Day trading, I like to short. So that's a good example of micro cap trade. One more thing I just wanted to emphasize off that last clip, from watching the last clip. I wrote, percent change matters, not price per share. Right? If you get into stock trading, penny stocks, that's a buzzword. Oh, you're trading penny stocks. Yes and no. Like, yes, there are penny stocks you can trade. No, penny stock returns are not exclusive to the penny stock arena. And what I mean is this. If you have a stock that goes from $1, or any financial product that goes from $1 to $2, you've made 100% return. If you go from $50 to $100, you've made 100% return. Put down $1, you now have 2. Or if you go to the penny land from 0.001 to 0.002, you've made 100%. Still the same return. The thing about the penny land that's just different is you have 10,000% between 0.001 and 1 penny or $1. Not sure which, don't quote me on that. But the thing you want to focus on when you're structuring your trade prospectus is your percent return. Then over here I just have 60 cents to $1.20 for an options contract, or for an options premium, and then Bitcoin from $3,500 to 7 grand. All of those, anytime that occurred, if that's a stock trade, options trade, or Bitcoin trade, you're still just going to return 100%. So sorry everybody, I lied. I said I was going to do Bitcoin in the cryptocurrency. This video, I'm just not going to do that. I want to keep it just to the micro cap example. Just still getting used to trying to structure lectures, but I'll do each part will be a different type of trade. So that was just the micro cap ones. I'll probably do a couple more, but they're all the same, so I'm gonna keep that video there.